Good afternoon to everyone. Thank you for joining us today. Warm welcome to all. This webinar that we are today conducting on significant judicial pronouncements is a important one because of the sort of developments that have happened in the courts, and that's become the sort of guiding light that we have for the purposes of interpretation and application of the GST law. So we are sitting in a situation where we are nearing the 5-year sort of anniversary for GST. We are missing a tribunal, an appellate tribunal, but the higher courts, in as much as both the high courts of the country and the Supreme Court have been pronouncing a lot of decisions and judgments on different issues, different sort of questions that have come to them on GST law, and have provided that light and sort of direction for us to apply the GST provisions as we are in this nascent stage. Some of the significant judgments which have occurred in the last maybe 12 odd months, which we aren't discussing today, are in case of inverted duty structure in VKC footsteps, which came from the Supreme Court, in the case of Radhakrishnan, which also was from the Supreme Court concerning provisional attachment. And they've sort of now laid down the clear position as to what is the interpretation one has to take about all of these provisions. So given the sort of role that these judgments and judicial pronouncements play, it is important and it becomes very relevant that we notice what's the relevant judgments that have come out in the recent times, and how these will impact business, how these will have a role to play and shaping up GST and its application. So my partner Abhishek and I today, on behalf of Dhruva, will sort of take you through three important decisions that have come from the courts. The first one being in the case of Northern Operating Systems from the Supreme Court. The second judgment that we have to discuss today is in the case of Munjal Manishbhai Bhatt from the Gujarat High Court concerning the value of land that is to be deducted in case of real estate transactions. And the last of what we will discuss today is the judgment, and the landmark one, you may say, in Mohit Minerals, which concerns CIF contracts and ocean freight, but has had some lot of media splash and has tickled everyone on what really is the position and role of the GST Council. So getting down to the first of those cases, what we would do is pick up the judgment as to what it is, has to sort of offer to us in terms of the precedent, and then also discuss a variety of sort of angles in as much as the income tax side of it, the withholding obligations, which Abhishek will sort of delve into in detail a few minutes from now. So the first one that we have is in the case of Northern Operating Systems. Here's a situation where this is a very commonly used arrangement where in the case of an MNC group or in multinational sort of entities, and where they have multiple presence across jurisdictions, there is a arrangement where personnel and employees are loaned, are effectively sort of deputed into the other jurisdiction. And because of that, what we typically call secondment agreements, there is a question as to whether there was a service tax liability in the past, and today very relevantly whether there is a GST implication in respect of these arrangements and transactions. So this judgment in the case of Northern Operating Systems is concerning the service tax regime. It covers both the period prior to the negative list regime, i.e. the positive list regime, and the entry that was then relevant is the one for manpower recruitment or supply agency services. And I'll take a quick moment to just read out the definition, because that's where the background is and that's where the context is set, which reads as manpower recruitment or supply agencies means any person engaged in providing any service directly or indirectly in any manner for the recruitment or supply of manpower, temporarily or otherwise. Evidently, this is quite broad in the way it's worded, and it's interesting that this is somewhat also finds its place even in the corporate tax law provisions. When Abhishek talks about it, he'll throw some light on that aspect of it. The judgment also so the question before the Supreme Court was not just for the period prior to the negative list, it was also for the period after the negative list, which is from 1/7/2012 onwards, and where there was a specific carve out, and therefore this fell within the negative list, that provision of service by an employee to the employer in the course of or in relation to his employment is effectively not brought to tax because it is within the scope of the negative list. Now, in this sort of legal setting, what was the issue before the Supreme Court? If you look at it, the question can be summarized in a very simple way, and that is whether it is a contract of services, i.e., employment, when the secondee was brought into the Indian company or the jurisdiction in India where the person was to provide his services, or it's a contract for services which the foreign co or the foreign entity provided to the India co, and therein sort of triggers a liability for service tax under the reverse charge mechanism. So in a nutshell, it is just that much of a question. And if consequently you answer it to say it's a contract of service and employment, there would not arise a service tax or a GST implication. Whereas if on the other hand, you are to sort of address this question as a contract for services, a reverse charge obligation does arise, whether it be service tax or GST. The provisions are rather similar, and so you would have both sort of tax being applicable. Now, what's the conclusion? And I will delve into the details of the sort of arrangement, the factual matrix in a moment. But what was the conclusion? I'm sure everyone is aware, but just to sort of summarize it and put it in perspective, the court has concluded that this was a transaction for manpower supply services in reference to the earlier pre-negative list regime, where the entries were listed out in a positive manner. And so it was held that there is a service tax liability both for the prior period and the post-negative list period. The court has effectively sort of sidelined the judgments of the Supreme Court itself in Volkswagen and in computer sciences on the premise that these offer no precedential value, and so these were not required to be gone into. There was a contention which was raised by the assessee in this case, which was that there is a revenue neutrality situation wherein there is refund or credit or both, and therefore even if the tax was sort of liable to have been paid, they ought not to be saddled with this sort of a demand now, because in the ultimate analysis it would square off by virtue of the refund or credit. This was also sort of turned down as an argument, and it was countered to say that it is not something that needs to be gone into in deciding this question, which the court is required to address. Finally, dropping the demand or setting aside the demand for the longer period, the extended period, the totality of the demand was modified on the basis that here in a case there was no requirement or there was no sort of occasion to make a demand for the longer period, and so the demand for that extended period was dropped. Now, as we go along, I think it is quite apparent that this particular judgment will have a sort of touch point or a footprint in the context of what happens in the corporate law side, corporate income tax law side, wherein whether there is a PE situation or there is a withholding obligation, and yes, what is then the classification for those purposes. There will, of course, be a sort of GST implication. As I mentioned earlier, the provisions are pari materia in what was in the service tax law and in the GST regime. There is, of course, also going to be some sort of a footprint in the context of social securities law and the treaties that maybe India has sort of entered into in respect of the social securities law, and a alignment of all of these is somewhere where a harmonious view must be taken at all times. So quickly, what was the factual arrangement? And I think this is important to appreciate, because this really sets the tone and the context of the position and the conclusion that was drawn. So it was not a case of a standalone deputation or secondment of certain personnel from company A overseas or foreign co-FCO to India in ICO. There was a sort of very elaborate arrangement in place, and that was in this manner: that Northern Operating Systems Pvt Limited, NOS, who is the respondent in this particular case in the Supreme Court, was to provide IT enabled services to NTC, which is the overseas entity, and this was in terms of a service agreement, and the compensation to NOS was on the basis of a cost plus model. Now, another entity in the group overseas, NTMS, was to provide services to NOS, who would effectively, then use those personnel for the purposes of discharging its sort of duties and obligations under the earlier agreement I talked about, which is a services agreement. Now, the secondment agreement was arranged in such a way that it would enable a actual salary recovery and therefore reimbursement by Indiaco NOS to NTMS, which is the FCO, and NTMS would directly bear or pay the social security costs and expenses in the home base country of the particular personnel. There was also another sort of master services agreement in line with what was in the services agreement between NOS and certain other entities within the group. And here it was called General Back Office and Other Support Services, again to be compensated on a cost plus model. And finally, between the employee who came into India and effectively was seconded and the entity in India, which is NOS, there was a letter of understanding which set out various terms and sort of defined what the obligations, roles, responsibilities of both sides were, and on the basis of which the two parties sort of interacted and worked their effectively their discharge their duties. Now, it's set of 4 agreements. There was a lot of clauses, details, covenants in each of them. But the Supreme Court has quite, summarized the entire context and the setting in this one paragraph, which I've sort of put up on the screen. And I'd take a moment, a little more than a moment, to read this out, because this is where it is truly summarized, the entire sort of, perspective and the sort of thinking and basis on which the Supreme Court ultimately reached the decision that it did. So it was the contemporary global economy has witnessed rapid cross-border arrangements for which dynamic mobile forces are optimal. To leverage talent within the transnational group, employees are frequently seconded to affiliated or group companies based on business considerations. In a typical secondment arrangement, employees of overseas entities are deputed to the host entity, India associate, on the latter's request to meet its specific needs and requirements of the Indian associate. During the arrangement, the secondees work under the control and supervision of the Indian economy, of the Indian company, and in relation to the work responsibilities of the Indian affiliate. Now, social security laws of the home country of the secondees and business considerations result in payroll retention and salary payment by the foreign entity, which is claimed as reimbursement from the host entity. And here is a bit of a few sentences which need a emphasis, and therefore I'm saying it in that way. The crux of the issue is the taxability of the cross charge, which is primarily based on who should be reckoned as an employer of the secondee. If the Indian company is treated as an employer, the payment would in effect be reimbursement and not chargeable to tax in the hands of the overseas entity. However, in the event the overseas entity is treated as the employer, the arrangement would be treated as services by the overseas entity and taxed. So, correlating to the earlier slide when I mentioned contract of services or contract for services, This entirely is that paragraph which sort of sets the tone and the manner in which the Supreme Court also went about analyzing the entire arrangement. Now, we've understood the factual background. We've got the conclusion the Supreme Court anyways has reached. And what was it that sort of directed or drove the Supreme Court into reaching this conclusion? We've listed out here the various factors or the tests, if I can say that, which made this happen. So the evaluation of the totality of the facts and circumstances, I think this is, this is the basics that will always be the situation which any court will look at, and any sort of tribunal will also go into. What is the overall scheme of things? And therefore, the various agreements were seen, and the overall objective for the entity in India, NOS, was to aid and support, by way of its different services, the overseas entity in serving its customers. So this was what was gleaned from the various agreements in place. It was also understood and noticed that the seconded employees were a part of a pool of skilled and trained sort of personnel that were deployed for the benefit of other entities in the group, and so as to enable those entities, including the one in India, to render their services. So in that context, there was a policy for loaning personnel, wherein even during the secondment, the terms of the employment of the seconded personnel and the arrangement between the seconded personnel and the Indian entity is in accordance with the global policy for the group. So it's not that India entity sat up and made up a engagement letter or an appointment letter and put down 5 clauses, 10 clauses, whatever it is, and brought those personnel in. Here's a case where the group global policy is actually driving and sort of setting the tone in which the two parties will interact and how they will interact. There was also an observation as regards the fact that what is the duration of the secondment, and moreover, more than that, there was the noticing of the fact that the personnel that came in before and after the tenure of their being seconded to India reverted back into that pool, reverted back to the overseas entity, wherein which was their parent or home base country and home base entity. So it was not that they were here for a long duration of time, which was a fact noticed here. It was not that, or rather it was observed that they came in from a pool and they went back to that pool. The next one that was noticed was that the manner of payment, or the manner in which the costs of those employees, their salaries, their all their emoluments, how was it paid? And in this situation, it was paid without, of course, a markup, but on a back-to-back basis, reimbursed to the entity overseas, and importantly, paid through that entity overseas. Fact was also that NOS in India exercised control over the seconded personnel. However, that was for a limited duration of the tenure that they spent here, and it was essentially for operational control and for the activities that they were to do, which the seconded employees were required to do. So it was highlighted that the entity here in NOS had no authority to either alter salary, impose sanctions, or do any such other point which in normal employment arrangement would typically have. An important observation which court has sort of laid down in this case is that there was a quid pro quo, and these have to be found in facts of each case. In here, they found that it was not necessarily in the form of cash, but in some other economic manner, and that was sufficient to showcase that there is consideration, i.e. there is therefore quid pro quo in the entire equation, and the levy therefore can effectuate. It was also noticed that there was an income tax treatment wherein payment was being made and taxes were being withheld under the head of salaries for the purpose of the income tax law. So these were the factors on the basis of which the sort of decision came to being. In doing this, the court also sort of reiterated some of the principles which has often time been used and repeated in this particular judgment. First one, that the substance has to be preferred over the form, and the second being that the nomenclature of a contract or a document is not decisive of its nature. You really have to go into the nitty-gritties of the document to take a view and come to a conclusion on that. So now, before we go into the other aspects of it, what therefore is the situation one must understand as being the test to apply or the factors to consider as we in our everyday life are looking at these contracts or are trying to sort of come to a conclusion as to whether there is a service tax or GST liability. I think the highlight points are the fact that there is no one factor or test that is a yardstick that is to be applied, and so there is no one single determinative test. Court has in its own words said this, that the conglomerate of all applicable tests are to be taken on the totality of a fact situation. And they've also gone on to say in the judgment that some tests and factors may in fact be irrelevant for a given situation, and so they will have to be ignored and glossed over when you come to a conclusion as to whether it is liable or not liable to tax. But we've sort of tried to summarize or list out for the benefit of our participants what those tests are, what those sort of parameters are, and in sort of bifurcating or in sort of classifying whether it's a contract for services or a contract of services. So firstly, the overall arrangement and structure between the parties must be evaluated. And as in we saw it in this case, where there was a arrangement where the Indian entity was to provide certain services, back office services, IT services, in a way speaking a extended arm of the overseas entity. And that gave rise to several contracts between the two parties and different parties in the group. And that's the overall arrangement and structure as to what is the true objective of the arrangement has to be gone into. The factual circumstances of each case has to be seen. So it really doesn't matter that, if you are to say that I'm paying, I'm not paying it directly, I'm paying it indirectly, I'm reimbursing it at cost, I'm not reimbursing it at cost, whether I'm paying the social security element in India, I am not bearing the burden of it. So what are the facts? In each case, there will be a differential sort of position possibly where we can, make a distinction. It's obvious that the tone and tenor of the documents will have a very important role to play, and therefore at the drafting stage itself and conceptualization stage itself, these have to be given good weightage. I would sort of maybe put that with a little bit of a warning of sorts to say the substance will always of course override the form, and it does not mean that if there was something written out, the tone itself will just be, or the tenor of it will simply enable a classification one way or the other. The other factors in sort of coming to whether it's a contract for services or off services, what's the tenure of the or the duration of the arrangement? In the particular case before the Supreme Court here, it was a tenure which was shorter than a year or about a year in most situations. What's the antecedent and the subsequent sort of position? So it was well noticed here that the personnel come from a pool, they're trained, they're skilled, they're coming in for the purposes of supporting the Indian entity. Effectively, they complete their tenure and they go back. They don't really need a great deal of supervision, and they're paid therefore high numbers in terms of what their compensation is. So all of these aspects become something that had to be gone into and were actually looked at in this case. Whether there is control over the personnel, whether that control is operational or it is more than operational. Again, this is a very important test, but it's only one of the tests, because oftentimes there is a question as to whether there is control, and that is considered probably the litmus test. I think the time has come where this test is not the litmus test, is to be understood. The Supreme Court has even in this judgment sort of mentioned that, and therefore said it's an important test nevertheless, but it's not the litmus test. In deciding this particular issue, the Supreme Court also looked at certain other earlier English judgments wherein they had evolved a three-tier test, and that in its subparts is whether the remuneration is paid by the employer, whether there is a sufficient degree of control by the employer, and other factors which are probably going to be derived or seen in the context of each case and each situation. The manner of the payment of the compensation or the quantum also that is paid is sometimes probably what's going to weigh on a judge's mind in understanding, how and what the sort of arrangement is. So I would maybe summarize it once to say that the fact of any one test will not sort of overpower the situation. All of them have to be taken together, and as the court said, conglomerate of all the applicable tests will have to be looked at. So from the context of the way the judgment is, that's the sort of detailing that we had to provide to you on the judgment itself. My colleague Abhishek is going to now look at certain other aspects of it which were not part of the judgment really, but I think there's an immense amount of footprint which we must discuss.
Thanks, Sanjit, and good afternoon, everyone. In terms of how this decision impacts from an income tax perspective, let's just quickly have a backdrop in terms of what exactly is the issue on the settlement arrangement from an income tax perspective. The settlement arrangement has been a matter of great debate in terms of the applicability of the withholding tax provision and how the treatment have to be considered in the hands of the foreign company when it receives, so to say, the reimbursement of the salary of the seconded employee. So the typical arrangement which is there, like there are employees which are on the payroll of the foreign company, they are seconded for a short duration onto the Indian company. The salary are provided to the employees by an FCO in the overseas jurisdiction, and the exact amount or the reimbursement is happening from the Indian company to the foreign company. This is a typical secondment arrangement as we have typically seen and also was dealt with in the Supreme Court decision. The issue pertained is to when the ICO is making reimbursement of the salary amount, so to say, to the FCO for the purpose of providing the settlement of the personnel, whether it would be treated as an FTS or whether that has an impact from a PE perspective, that has been a debate, and hence whether any withholding tax is required, considering the fact that this reimbursement, whether it constitute as income in the hands of the FCO when it receives from the ICO, and whether it would be taxable in India. The revenue has been contained in that the seconded employee are on the payroll of the foreign company. The employees has a lien on the employment with the FCO, and hence they remain on the payroll of the foreign company. And therefore, what has been granted is a service of providing this personal, technical, managerial, or whatever to the ICO, which is in the nature of a service, and it partakes the character of FTS. This amount which is received as a reimbursement is having a different characteristic than merely to say it as a reimbursement of cost of personnel per se. So therefore, they characterize this as an FTS which is subject to tax, being falling within the definition of the FTS, and we will see in some time what the definition is, and hence it is subject to withholding tax as per the income tax provision. There is another element of service fee exposure to state that the employees seconded into the Indian company are carrying out the activities which further in the business interest of the foreign company, and hence to that extent there is a service fee element, because these services are rendered through the employees of the foreign company for furthering the business of the overseas foreign company which is there. From a taxpayer's content, the typical argument which is there and which Ranjit also touched base is that under a typical secondment arrangement, the seconded employees are completely under the supervision and control of the Indian entity. The foreign entity, apart from just seconding the employee to the Indian company, are not responsible in terms of their conduct or in terms of the risk attached to it for the services which they are giving it to the ICO. So therefore, and more importantly, whatever is the salary which is paid, whether paid in the India or whether paid overseas, it has already suffered TDS under 192, and therefore entire amount has already been subjected to tax. This is nothing but a reimbursement of an expense which the ICO gives it to the foreign company, which has already suffered taxation, and hence it should not have a double taxation as such. So this has been a debate, and lots of decisions have discussed on this issue. It has not settled, and even as we are speaking, there are many decisions which are coming for and against the taxpayers as such. Now let's see what has been the broadly judicial precedents on this aspect from an income tax perspective. Manjit, next slide. Now, everyone know on the secondment arrangement, the landmark ruling of Centrica India offshore, which has dealt with extensively whether the secondment arrangement, any payment which is going from an Indian company to foreign company, which the taxpayers are treating it to be a reimbursement, whether that would be treated as an income taxable in the hands of the foreign company in India and hence subject to withholding. The typical arrangement, and if you'll see the fact pattern of Centrica is similar to that of the NOS decision which is there, wherein the employees were seconded to an Indian entity which was involved for control and management of the business of through which was entered into through the vendors in India and to oversee that operation which is there. All the customers and all were served by the foreign company, and there was no direct interaction between the ICO and the foreign company's customers as such. But on the basis of the facts of the case, for everybody know, and just summarizing it for to set the perspective, the seconded employees were carrying out the control and management of the business of the foreign company, and hence it was for the furtherance of the business of the foreign company which is there. More importantly, the foreign company, the employees who were seconded to the Indian company, they were under the payroll of the foreign company and they had the lien on employment with the foreign company. In a sense that after the secondment period is over, they could go back and have their employment continued with the foreign company after the secondment period was there. And hence in this fact pattern, payments would qualify as an FTS and not quote unquote as a reimbursement of salaries and hence subject to withholding. There was a service fee exposure also that was discussed based on this fact pattern that the seconded employees were working to further the business of the foreign company, and hence to that extent the service fee exposure is there. Though Delhi High Court didn't get much into as to what would be the impact of this being treated as an service fee, but they restricted themselves in terms of that this would be treated as an FTS in those fact pattern which is there. Again, the SLP filed by the SSC has been dismissed, but we know that SLP in that sense doesn't lay down the law by the Supreme Court as such. Now, after this decision, there have been various judicial precedents which have rendered in favor or followed Centrica in terms of deciding the matter against the SSC. But again, based on each facts of the case, those were determined in terms of aligning it with the facts of the Centrica or they were distinguished with the facts of the Centrica. Now, it's important to know how this decision of NOS in the Supreme Court impacts from an income tax perspective. One may say that, okay, this decision has come from the perspective of service tax. It is in a sense a settled judicial precedent to that you cannot directly lift the analogy or the observation or the ratio laid down by in context of a specific fiscal law, which is having a different perspective, different context as such, directly into the income tax perspective. But if one sees the arrangement of secondment, which has been dealt with in the NOS decision, is in a sense very similar or pari materia with the secondment arrangement as have been dealt with from an income tax perspective. Since it's and also the observations which have been dealt with by the NOS are in a sense equally important from an income tax perspective. So from that perspective, one may say that even if it is an obiter from an income tax law perspective, it's still, since it's a decision of the Supreme Court, it is binding as such. Moving further, to say that this decision was rendered in context of inter alia, determining what you mean by the definition of manpower supply agency. And if we compare the definition with the definition of an FTS from an income tax 917 perspective, it is parametry as such to state that manpower recruitment agency includes providing any service for supply of manpower temporarily or otherwise. This is the definition under the service finance act perspective. Now, if we try to read it contextually in context of 917 also says that fees for technical services include the provision of services of technical or other personnel. So therefore, since there is a similarity in terms of the wordings which is used in the definition, the observation of the Supreme Court in a sense would also become equivalent to see how it impacts from an income tax act perspective. Now, we have discussed in detail in terms of Sanjit took you through what were the key parameters or the key aspects which were present in the facts of NOS and how Supreme Court based on an overall reading and based on an overall consideration of all these parameters, come to the conclusion that this is rendering of service as a contract for service and not the contract of service. The four element, if I just want to summarize and without giving any weightage in that, the first and foremost was the Supreme Court held that, okay, who is the real employer, and therefore determination of an employer was the test. Second, whether these seconded employees are working for further in the business interest of the FCO or they are working from an ICO perspective. Second, it was a part of a global policy as a secondment, and Indian company as such didn't have much say as such. And fourth, largely was the duration. In a sense, they were coming to India for the limited purpose and they were going back into the pool and becoming part of the foreign company as such. The litmus test, as Ranjit mentioned, quite often argued from an income tax decision perspective was always that these seconded employees work under the direct supervision and control of the Indian entity. The Indian entity in turn economically bear the cost of these salaries of the seconded employees, and hence Indian company should be treated as an economic employer. Now, going by what Supreme Court observed on the supervision and control, whether the test of economic employer has been diluted or has become no more relevant as a test to see whether there has been a provision of services by FCO or it's a pure reimbursement which is there. Again, we cannot just isolate or detach this argument of supervision and control independent of what is the overall arrangement which is there. So therefore, this test of as a litmus test to say that, okay, Indian ENCO being the economic employer should be only the test will not be suffice. And one has to see the overall arrangement in terms of the parameters just we discussed, which were there in the facts of the NOS, which is there. Now, can one say that, okay, if not, there is an employment as such, but whether there is a case of a dual employment, which is there. Say, it's an admittedly an employer of the foreign company wherein the social security and other aspects are taken care of and the payment of salary is also made through that, in a sense, from an administrative convenience perspective. And at the same time, it is the employee of the Indian company as well, because it is the seconded employees are working purely under the supervision control for the purpose of ICO. FCO doesn't have any responsibility or any risk attached to whatever work they are doing as such. Supreme Court, given the facts of the case in the NOS, didn't adjudicate or didn't have the fact pattern before it of whether it would be treated as a dual employment or not. But at the same time, they didn't deny this aspect that there could be concept of dual employment as such. Whether the issues from an income tax perspective gets diluted the moment we say that, okay, there is a dual employment, and hence in that context, ICO also should be treated as an employer, and hence whatever are the, it is a contract of service in that sense, and the foreign company, apart from just giving those employee as such on and to be on the employment of ICO, should not have any other impact from an FTS perspective. But the moment we try to take an argument from a dual employment perspective, it may, in a sense, increase the exposure from a PE perspective or from a POEM perspective, which we'll just discuss subsequently as such. Given the fact that if we admittedly accept this as a dual employment concept, which is there, if the employee does any work which further the interest or pertaining to the foreign company as such, it may have an exposure from a POEM and a PE perspective. So that is one aspect which one should consider before we take any argument to say that it's a dual employment, and hence to negate the argument of being it treated as an FTS on the payment made by ICO to FCO, but we at the same time need to correlate it with the exposure from a PE or the POEM perspective. Next slide. As we discussed, there were 4 parameters or 4 to 5 parameters which is there, and Supreme Court didn't lay any weightage or, okay, which will prevail over other as such. The fact pattern of NOS, and which was largely there in a central class case as such, that these seconded employees are coming at the request of the ICO, which was in a sense newly set up, to provide back office support services to the business of FCO, so that whatever these seconded employees are doing or ICO is doing is in a sense nothing but an extended, in a loosely used term, extended arm of the business of the foreign company. And this was in a sense a major factor which Supreme Court considered, apart from the fact that these employees are on the payroll of the foreign company, to determine that the overall arrangement is the contract for services and not contract of service. take an example then, and there have been various situations that wherever any ICO, even though it would be a 100% subsidiary of a foreign company, it has been set up to cater to the business needs of an India perspective, and it has nothing to do from a business perspective in terms of furthering the business per se of the foreign company. So take an example, a manufacturing or a shoe company which is there, which has have a global presence as such. Now that company is setting up in India to trade or to do business in India and cater to the Indian market as such. So whatever that India does is in terms of enhancing the business from an Indian companies or India market perspective, and in a sense, nothing to do from an overseas business per se perspective. Obviously, there could be shareholders, state and shareholders' interest as a foreign company which would be there, but purely from quote unquote business perspective, it is de-linked. So if in this situation and other situation, other aspects remaining constant in terms of the salary of these employees are paid by the foreign company, they continue to remain on the payroll of the foreign company, and it is reimbursed by ICO to the foreign company. Or take another example. In both this situation, the ICO was newly set up and the employees were seconded to ensure that the business processes or the proceedings are appropriately in alignment with the foreign company's processes which are there. Take an example where the Indian company is already having an established business and it doesn't require any foreseen as such from a foreign company, but the employees are seconded to further expansion of the India business or for bringing in some aspect which will cater to the Indian business requirement as such. Whether in this situation where there is no quote unquote alignment or furtherance of business of a foreign company, can still the decision of Supreme Court would be applicable to say that it is contract for services and not contract of services as such. So which is the prevalent or the predominant factor, whether these employees continue to be on the payroll just for the purpose of complying with the social security, or the alignment of the business which Indian companies carrying out, whether also have to be looked into, as has Supreme Court also mentioned that you have to consider the overall aspect and not just a one determinative factor. If in this fact pattern wherein the seconded employees are coming not for furthering the business interest of the foreign company but for furthering the business of India, I think there would be a case to see how the court will interpret this aspect when they deal with the FTS issue or the settlement transaction issue now in light with the Supreme Court decision which is there. Now again, whether we all are discussing, given the fact that whatever observations of NOS are there, courts and all of us as a consultant, all as a taxpayers will try to implement it to say that how it impacts the income tax decision. Whether it changes anything from a treaty perspective to say that whether it by provision of this personnel to the ICO, whether it has an impact from a make available perspective. We believe that it should not have any impact, and whatever were the test as were applicable to see whether by merely provision of the personnel from the FCO to ICO, whether the technology is made available, which in the case of Centrica, as all of us know that they were coming, setting up the business processes, teaching or guiding the Indian company as to how to perform all the business processes and all. And in that context, it was said that, okay, the technology was made available, even though it was through only personal rendering of the personnel to the ICO, and FCO was not per se involved in monitoring those activities. But if suppose the seconded employee are not in the role of a quote unquote technical, but they are in the role of a more of a say managerial activity and all to oversee the overall business operations from an India perspective. Now we all know that under the India-US treaty, the technical explanation which I have given, and largely if we see the made available clauses which are there under all the treaty, they use the term making available any technical or consultancy services which are there. And it in a sense is now more or less a settled position to say that it has to be purely, if at all to fall within the ambit of a make available, it has to be a technical knowledge available. And even if it is into a consultancy services, it has to be also pertain into the technical knowledge which is made available. But per se, if it is in a managerial role without having an element of a technology being transferred and all, in that context also, it should not make available as such. So in a treaty situation where a make available clause is there, and even though there is a secondment of the personnel and all these aspects are being considered to be say that, okay, there is a contract for services as such, then to one can argue that if it's a purely a managerial services as such, there should not be any impact from a treaty perspective having a make available clause. wherein the language is technical or a consultancy services. The another element now from a PE perspective, and if I just give a background, there was a Morgan Stanley decision which rendered that secondment of the employee. It was a factual observation by that they are coming to India to see they are under the control of the foreign company, and they are also coming to ensure that the Indian processes are such that the foreign company is able to perform well. So in that context, it was held to be a service PE which is there. Second, again in Centrica, the same fact pattern which was there. Now, if we try to draw an analogy from the observation from the NOS to say that if the seconded employer coming to further the business interest of the foreign company, it in a sense therefore leads us to the aspect of whether there would be a PE exposure which has further enhanced, which was until now only restricted to the facts as has been the Centrica, or now the department will try to say that okay, the moment they are coming, if it is established that they are coming to protect the interest of the foreign company, there is a PE which is established as such. Whether it would be a fixed place PE or service PE as such, one need to determine. But this would therefore lead to a further element of a debate to say that if they come as an secondment to the ICO, which obviously there would be some element of business interest of FCO would also be protected, whether the department will try to enhance that analogy to say that okay, there is a constitution of PE from that perspective. Again, there is also a debate between service PE or FTS. From a fixed place PE, there are various thresholds which are applicable. If it is not fulfilled, then we will do not get into the fixed place exposure. But under the service PE clause, typically which is there, if the characterization of the amount involved is already held to be an FTS as per Article 12 or generally, then the service PE doesn't come as such. So in that context, if it is alleged that there is an element of services involved which constitute FTS by virtue of providing of this personnel, if it is FTS, then service having even if having a, then there cannot be a service PE as such. It becomes a moot question or an irrelevant question as such. Now let's, here was the fact pattern wherein the salary was paid overseas, which again is a typical fact pattern in day-to-day life, which we see that under any settlement arrangement, the salary is paid by the FCO being, so to say, the legal employer, but it is reimbursed or the exact amount is paid back by the ICO to the FCO. Say a nuance to an arrangement to say that, okay, to avoid all such controversy, if the salary is paid by ICO to the seconded employees, all other remaining aspect remaining constant without getting into the controversy and all, and there is per se no cash movement at all from ICO to FCO in that sense. So there would be social security contribution which would be there by the FCO, but we assume for the fact that ICO is not reimbursing that. Therefore, it becomes very simple. Now there is no transaction as such of the cash flow because there is no cash flow movement, and hence why there would be any question from an income tax or from a GST perspective as such. Here, it is very important to see the observation of the Supreme Court on the consideration which is there. At para 58, they mentioned that just having a reimbursement of the exact amount of the salary cost will not be a determinative factor for a consideration. Consideration is much more beyond it. It's the economic benefit which the ICO has received in terms of availability of a talented pool and getting access to that. That could be in some sense as a form of a consideration which is there. So therefore, the relevant fact pattern is that you see whether there has been first rendering of a services by virtue of providing of this personnel from FCO to ICO. Considering the ratio observations of the Supreme Court and even otherwise held from an income tax perspective. If we come to that conclusion, then whether even if there is no cash flow going from ICO to FCO, still whether there could be an issue from an income tax perspective to say that, for example, from a transfer pricing perspective, if this is a related party transaction and if it is held it to be services rendered by the FCO to ICO, whether there would be any imputation of a transfer pricing in the hands of the FCO. Obviously, since there is no payment going from ICO to FCO, there will not be any TP aspect on all. Though independently, the amount of reimbursement given or the amount paid for the salary cost itself would be subject to a benchmarking, but we assume that there is no issue on that. Just by virtue of not having payment from ICO to FCO, whether it will absolve the issue, so to say, from an taxability of the income perspective. One could absolve the issue from a withholding tax perspective if there is no cash flow involved and all. but whether FCO would still be liable from income tax perspective by virtue of invoking the transfer pricing perspective. Ranjit, you can discuss on the service tax and the GST element on this fact pattern as such.
No, I think Abhishek, you've sort of already set the tone for this one, that a tweak in the arrangement whereby the payment is made directly and not as a reimbursement route to the overseas entity does not take away the sort of conclusion which the Supreme Court found in this case, that there is a consideration. And maybe some part of the judgment just goes on to say, as you've mentioned, it is just one method of reckoning that you make a reimbursement. And the Supreme Court has also gone on to observe that the economic benefit that is derived by the Indian entity, which is NOS, by virtue of the larger revenues, and for the secondment agreement, meaning in context of the secondment agreement, the fact that there is a quid pro quo is implicit in the overall scheme of things. I think this pretty much clarifies that you can't just simply look at the consideration definition and say, oh, I'm not making a payment and that's the end of the story, and therefore there is no sort of tax implication because of that reason. The overall scheme has to be seen whether the fact of consideration can be gleaned from the arrangement that is in place is going to be an important sort of role that advisors and people drafting the contract and agreements will have to sort of have, because you stand up in court and then you have a situation where nothing is paid, yet there is a finding that there is consideration, that can become quite a troublesome one in the case like we are seeing here. So the sort of answer remains that service tax implication in the context of this fact profile, with the tweak of the reimbursement not being in place, would still remain. The service tax would be liable, and GST again is quite close to what the service tax arrangement is, the service tax law is, and therefore the conclusion would be the same, that there would arise an arrangement, there would arise a liability for tax. Now, having said that, maybe there are going to be different and varied situations and scenarios in which one will have a position to take, whether there is a liability or not. What is the sort of withholding then to sort of make in that case, given that it's now not being regarded as salary, then should I have a withholding which is under a different head? All of this will be dependent in each case, in each situation, on the facts, on the documents, on the overall scheme. I think we cannot stress that enough, that as you go about making a position, taking a position on tax implications, you take any one sort of row, test or factor, you have to take them all into consideration. So this is the sort of points and thoughts that we wanted to share with you all today on the judgment on Northern Operating Systems. Abhishek, do you want to add anything further, or we can move to the next one?
We discussed, so we can move to the next decision.
Okay, so as we can see that it's quite a involved discussion. We've taken quite some time to discuss one case, and that really showcases the sort of nuances that are there. It showcases the complexity which is there in respect of these issues and arrangements, and therefore how one must not sort of look at them in a light fashion and just sort of make a quick decision on those. We're taking up next the decision of the Gujarat High Court in Munjal Manish Bhatt. We are conscious of the sort of amount of time that we have left, so we'll try and take this up as quickly as we can. This decision again in May of 2022 concerns the GST regime and was concerned with the buyers of an entry in a notification, which was in respect of deduction of land value in that notification. So 11 of 2017 of the central tax entry number 3 is what we are discussing, and paragraph 2 of that particular entry in serial number 3 puts out the manner in which the valuation must take place. Now, it's important to sort of notice how this was done. It says that in the case of supply or service specified in column so-and-so against a serial number so-and-so of the table, involving transfer of land or undivided share of land, as the case may be, the value of such supply shall be equivalent to the total amount charged for such supply, less the value of transfer of land or undivided share of land, as the case may be. Now, so therefore, it's pretty clear that the value of land cannot be brought to tax, and there is just no scheme. There is just no power within the GST law to levy a tax on land, and therefore the concept of this deduction. Now, where does this sort of tend to go awry is in the latter part of this particular statement, where it goes on to say, and the value of such transfer of land or undivided share of land, as the case may be, in such supply shall be deemed, and that's where the fiction comes in, that shall be deemed to be 1/3 of the total amount charged for such supply. And that's where the shoe pinched, and that's where the issue was taken to the court. There is further on a explanation as to what is total amount received, and what it must consist of and not, and that's maybe the detailing we need not worry about. But what's the issue therefore before court? Whether the 1/3 deduction for land value is valid in all situations. There are two situations in this particular writ petition that was brought to court, and therefore the question was in all situations. Court's conclusion was that the concerned provision, i.e., this particular paragraph 2 and the deeming fiction, is to be read down to the effect that the deeming fiction of 1/3 value deduction is not mandatory. Such deduction, court goes on to hold, is at the option of the taxable person in cases where the actual value of land or undivided share in land is unascertainable. In the context of a set of case or one set of cases which concerned and were coming up from the advance ruling, the advance rulings were effectively quashed, and it was concluded that the transfer of developed plots is not liable for GST. Now, this being the conclusions, what was the factual matrix? I think I can quickly, sort of bring into the limelight. There were, like I said, two streams of facts that were placed before the court. The first one was where a purchaser, and it was a claimant of refund, entered into an agreement for purchase of plot and for construction of a bungalow on the said plot. This was a scenario where these are second homes, holiday homes, etc., and therefore maybe somewhat luxuriously done up. Where in Gujarat, there's arrangement was put into place in such a way that the area land would be developed, and then after that separately the sort of construction of the bungalow would take place thereon. And very clearly and distinctly in that document, the agreement between the parties, the values, the separate values and distinct consideration was showcased for these two limbs, which is for the value for the land and the value for the construction and the construction of the bungalow. This was one stream which was before the court, one factual stream. The second factual stream concerned the situation where the developers intended to sell developed parcels of land, which was basically doing some plot marking, fencing, electrification, amenities were being put into place. And in that respect, there was consideration which was charged by this developer to the buyer or the future buyer. And in this case, there was advance rulings and also appeal orders passed, which had held that such transaction is a supply, and that's how they viewed it, as a composite supply of sorts. And as per the notification, since the deduction that is available is only limited to 1/3 in terms of the language in the notification, there could only be allowable a 1/3 deduction and not more. And that was the conclusion which was reached. So these were the two streams of facts. I'm just stepping back into the first one to highlight a particular nuance of that, which is that the purchaser in this case was the party before the court, because the developer, the builder, whichever way you look at it, in that case had effectively sort of charged the tax, not given deduction more than 1/3, and therefore the the entire amount of tax that was paid was sought to be claimed as refund. And then that's why the party, which is the purchaser party in this case, went to court, and that's a reason why the court finally went into refund aspects of this matter. Now, as we discuss this case, interesting sort of questions may come up in your head, that whether This position has now been taken by one high court in the country. Should we be able to adopt the same position in other states, in other jurisdictions? And the response probably is in the positive, to say that until and unless there is a sort of contrary view or a different view emanating from one high court where you're assessed, then this position and this view can apply and hold fort across the board. Of course, this is now until such time that this is taken to the Supreme Court, challenged and maybe varied by the Supreme Court. But whether this should go to the Supreme Court or not is not something I'm going to talk about. But if it did go to the Supreme Court, I think our belief is that this probably may not get a different sort of conclusion because of the history of this issue, the history of this matter, and how it sort of came to be. And therefore the conclusion should remain intact is what we think. Now, what were the sort of reasonings or the premise on which this particular judgment came to be? So I think these are fairly straightforward and quite simple points that the court has made in a very elegant manner. The first is that GST is a tax on supply of goods and services. Here's a case where it is sale of land, and it may be in any form, developed or otherwise. It is still outside the pale of taxation. So you can't have tax on land or land value. And that was, I think, the fundamental observation which the court put out front there. The second thing which they sort of highlighted was that the bifurcation between the value for land and for construction activity is available. And in these documents or in the documents before it, these were very much there in the contractual documents. And so these values have to be adopted for the taxability, and not any notional or other value, especially that given to you by a notification by virtue of deeming fiction. So that's the second principle, which sort of enabled this conclusion. The third is that the statutory provision for valuation, which is our section 15 in the primary legislation, requires the valuation to be done for a supply in accordance with the actual price paid or payable. And where it is available, the tax has to be levied on such actual value. So if you insert and fuse a deeming fiction in there and then say that, no, I will, having known and having available the actual price paid and payable, also sort of give a arbitrary deduction in by virtue of the deeming fiction, that may not be correct. And that is what the High Court has gone on to hold, that the deeming fiction can be applied, but where the actual value is not ascertainable. And in coming to that sort of view, the High Court was supported by a decision of the Supreme Court in Wipro, which concerned valuation in case of imported goods, where value of loading, element of loading and unloading charges was added on a percentage basis, and where court went on to hold that no, you can and you should be adding that in, provided you don't know the actual. So if you know the actual and you have the actual, then you will not be able to go on a percentage that the law prescribes, but you have to go by the actual value and add that into the valuation of the imported goods. The High Court, well documented by virtue of certain illustrations, and these illustrations were based on different size of plots, different construction costs. They've gone on to say, therefore, that the standard deduction for 1/3 of the total consideration for the land value is arbitrary, because it uniformly is applied irrespective of the size of the plot, the construction that is to be made, the cost therein, and their various other parameters which the law is sort of oblivious to, or is turning a ignoring by coming and stating that in all situations, all circumstances, it's only 1/3 deduction that is to be allowed. Some of the very important reasoning that was put forth by the court in coming to this conclusion, the legislative history of VAT law, service tax law was all noticed, and how the judgments were rendered in the earlier regime before the GST was applied. And in particular, there are a set of cases in sales tax, and then of course also in service tax, which have gone on to sort of give the court the direction and the clarity that this particular deduction 1/3 in the notification in the GST regime is not appropriate, is to be read down. So in sales tax, there's been a very now well settled position that construction contracts were originally not liable to tax, to VAT or to sales tax then, and then there was the Builders Association's case. But after that there was the Constitution amendment, and works contracts were brought to tax on the value of the goods by allowing for exclusion of value of land, labor, profit. And such exclusion was also tested out in one situation, and it was held that it is to be made at actual, and there can be no capping that the law can provide for. So the Supreme Court's views in the second Gannon-Dunkerley case, which concerns deduction for labor and profit, the first L&T case, which concerned tripartite arrangements and tripartite development agreements, and the first L&T case again, which concerned the rule which brought in a capping for the deduction of land value, which was also read down, were all taken into consideration in reaching the conclusion that the High Court here reached. Another significant sort of judgment which was noticed was the case in Suresh Kumar Bansal's case, the Delhi High Court, where the court said that there cannot be a deduction in this manner, or there cannot be a tax levied in this manner based on the way in which the rules were then in place, the service tax rules. So the amendment then took place where the service tax law was effectively retrospectively amended so as to prescribe a deduction of the actual value or the fixed percentage when the actual value is not known in levying service tax on the works contract cases or on the construction situation. So these were very much the background, the backdrop in which the earlier law sort of came to be settled. And therefore they were in that sense pari materia today when the court was looking at the GST regime and the GST provisions. And all of these cases, whether in Gannon-Dunkerley second case or L&T first case or Suresh Kumar Bansal, brought it to the same sort of position and view that there cannot be a artificial deduction that is given for land in the case when you're taxing works contracts or you're taxing building construction contracts. One of the judgments which the department, the revenue department cited was in Narne construction, where the Supreme Court had held in the context of Consumer Protection Act that it is a sale of developed plot is not only a sale of land, it is a different transaction than a mere sale of land. The High Court has distinguished to this, of course, to say that it was only in the context of Consumer Protection Act, and I think Abhishek mentioned this earlier, that you can't take a law and its conclusion or a judgment and its ratio and apply it, as if it applies to all situations and all laws and all positions. That's what the court has gone on to say, that it has to be restricted in its application. And High Court goes on to say that if the land is already developed and thereafter an agreement is entered into with the buyer for sale of such land, then it would not involve any service, is what they've observed, and therefore sort of distanced itself from the decision in Narne Construction's case. Now, certain other sort of observations that the court has brought about is that deeming fiction in this case has resulted in a measure of tax having no nexus with the charge. This is the Rajasthan chemist case, which is there, which they relied on. There was a concern which was raised by the revenue department, and this is an interesting aspect of the matter, that what if there is a value shifting and I'm writing up a document and I put greater amount of value to the land so as to not pay GST and therefore avoid my appropriate taxation, and therefore there is a value shifting and inflation and whatnot, in which case the court has had made two observations: that the GST valuation rules can be resorted to by the department and it is not remediless. So if there is a doubt or if there is a concern that is raised around the values and the amounts that are given in the contract, these can be gone into and probed, and therefore there is a situation where they have the ability to go into it. In this case, which is in the case before the court, there was no doubt about the value stated. There was no averment that these were fictitious or they were wrong or any such thing. So the court let it rest and said that if the document is there and it's clear and you have not in any way raised a doubt, there cannot be a questioning of it. And in that context, the court noticed an income tax decision in Mangalore Ganesh BD Works, wherein it has been held by the Supreme Court that the taxing authorities do not have the power or jurisdiction to rewrite terms of agreement between the contracting parties that was arrived at on arm's length. And finally, the sort of factor which also had I think a immense sort of impact on the mind of the court before it came to that conclusion. And in my view, this is probably the most significant one amongst them all, is that the GST Council in its 14th meeting had actually raised this issue, that the deduction in a deeming manner, in a fictitious manner, so to speak, is not proper in view of the judgments of the Supreme Court and in view of the judgments of the High Court in Suresh Kumar Bansal's case, which resulted in a amendment of the service tax law. So these were noticed, these were discussed in the 14th meeting of the GST Council. And at that meeting, therefore, there was certain sort of dissent as to whether this is the right approach and whether this is supposed to be the appropriate way to go about taxing these transactions. And there was a suggestion in that meeting itself that the deduction for land should be based on the ready reckoner value or on the basis of a stamp duty value. And these were maybe suggestions, but was very much brought on the table and was sort of was noted and kept as part of the meeting, and they're available in the minutes. And I think this was one important reasoning on the basis of which the court came to this view. Now, while this is a judgment, this is a ratio, we know what the conclusion is. Perhaps a few questions that may, come around because of that. So, what would happen where the value of land is not ascertainable or it is not depicted very clearly in the documents? Whether then the ready reckoner value or the stamp duty value can really be taken up, as was suggested in the 14th meeting of the GST Council, and applied that to make a deduction on the basis that it gives you a greater deduction than the 1/3. Our view, it would be in this case that it would be appropriate that the document, or it would be fair that the document actually mentioned the value and it be very clear and conspicuous. If it is to be deciphered, gleaned in the way that it is to be seen from ready reckoner, it's not coming through from the document, and you look at the stamp duty value and you say, I will apply and adopt that, just because the High Court here said that it is not mandatory, you can show the actual. It may be a possible, sort of way of doing things, but it may not be the most straightforward and simplest way, because the GST department and their authorities will turn around and say that, look, if your document is not clear as daylight, then we are not going to sort of, allow a ready reckoner value, stamp duty value, or whatever be they, as legitimate as they are, to be applied and, a deduction claimed. So it would become a contest between the parties for, the purposes of what deduction is to be claimed. The other issue that will sort of emerge is whether there is a refund available for the past period, and how would that sort of have to be done and looked at. Now here there is a set of situations which we maybe differ from jurisdiction to jurisdiction. In some states, typically in Mumbai, they do not have a very clearly demarcated value for what's part of the land and what's the value for the construction activity. And in that situation, what would then be the ability for us to go back and seek a refund? So that would become a first question that would be asked in case of a refund for the past transactions. Of course, then the other questions that will arise in all cases would be bar of unjust enrichment, what is the documents, whether there is limitation in you've crossed and breached, how the Mafatlal Industries constitutional bench judgment of the Supreme Court will apply, and whether that has a application in a given set of facts. These will all be issues that will have to be sort of tested out and gone into for a claim for refund. Whether this conclusion would also arise and remain in the context of joint development agreement, I think the answer to that it would be yes, that it would also apply in the case of a joint development agreement. There is no reason why the same sort of ratio or logic that has been evolved by the court in this case would not apply in a regular JDA. So, these are the points that we wanted to share in respect of the Gujarat High Court decision in Manish Bhatt's case. Taking the next one, and perhaps this is the most, this is the longest one judgment, of course, in comparison to the other two that we talked about. This is also the most controversial one. And I say controversial, I don't mean it in a negative manner, but controversial in the context of the splash that it has created in the media, where there is a wonderment as to whether the GST regime, the GST council, is now going to sort of collapse like a pack of cards, and we are now going to see states go in different directions and have a levy of their own liking and will, or it's not going to be a GST of one nation, one tax. There's a lot of sort of buzz about that. I think that's a side point, that's a sideline thing that we have to talk about, and I will talk about that in a moment, in a few moments from now. But putting in place the judgment and what its relevance is. So as most would be aware, it was a reasonably straightforward issue before the court. It was in the context of the GST regime, whether a CIF, which is cost insurance freight transaction, is to be brought to reverse charge under the GST on the freight element which is paid overseas. So the conclusion, of course, is that the importer is the recipient of the freight service, and the court had its reasoning and its rationale as to how it reads it that way. But the court finally concluded that there cannot be a slicing and therefore a retaxation of the freight component of a CIF transaction, because it is a composite supply of goods and services where the principal supply is of goods, and once it is taxed as a supply of goods in the import stream, by charging it to duty and IGST as a CIF transaction, you cannot have a sort of re-levy in recharacterizing it as a service transaction and taxed again. And therefore, in conclusion, there is no GST payable under the RCM scheme. Now, very simply, how and what was the factual matrix? An Indian importer is entering into a CIF contract for supply of goods to it and importation of those goods. The foreign exporter contracts with the shipping line, and the importer in India has no contract with the shipping line, and therefore is does not share any privity of contract with those parties, at least as far as the freight and the freight element is concerned. The shipping line therefore provides the transportation services to the exporter overseas. They are both outside of the Indian jurisdiction. The exporter makes the payment for such freight charges to the shipping line, and the importer at the end of the day imports the goods into India and pays the amount that is agreed with the exporter party, which is effectively for the goods at its disposal, which is at a CIF level. Now, what did the Gujarat High Court do? Because the judgment came from the Gujarat High Court's decision, and it sort of went into the Supreme Court, where the conclusion was premised on one sort of limb specifically. So the findings of the Gujarat High Court was based on the fact that the Indian importer is not the recipient of the transport service in terms of Section 293 of the CGST Act. The recipient of that service is the foreign exporter. The termination of service in India does not make the service made to take place in India. It takes place outside India. It's just terminating in India, because that's when the importation then begins of those goods. Section 75C of the CGST Act, which concerns interstate supplies, cannot be read extensively, and the court in that case, it cannot be read so extensively, to conflate the supply of goods or services in the taxable territory to the concept of place of supply. The next point that the court looked at and concluded was that since custom duty is paid on the goods, on goods which includes freight, the notifications imposing a double tax through a delegated legislation is not permissible. And that's the sort of one which the Supreme Court has also endorsed effectively, not the others. The other point which the court in giving its ruling held is that there is no territorial nexus for taxation. Supply by one person in a non-taxable territory to another is not in this case liable for taxation. Now, the Supreme Court conclusion is there at the bottom of the slide in bold. That's the way in which the Supreme Court has seen it, that the CIF contract is a composite contract of supply of goods and services, and the principal supply is that of goods. And this was admitted, effectively both by the government revenue department and by the assessees. And the such transaction, which is the import, is liable to be taxed as a supply of goods. Again, no differing views on that. So the levy of IGST under RCM was then held would contradict the principle of composite supply and therefore be in violation of the GST legislation, which was that as a principle, as a composite supply, I'm taxing this as goods. You don't recharacterize or slice out and say that I have taxed you, but now I will pull out a slice of that, which is the freight element and component, and bring you to tax again by virtue of calling it a service. So that's where the Supreme Court has brought its conclusion. But in doing so, it has had certain other observations, and they sort of correlate to the High Court's views. And how they correlate is what we'll just take up. That the place of supply of transportation service by a foreign shipping line would be in India in terms of Section 13(9). That's the first conclusion, which differs from what the Gujarat High Court said. The freight transaction is a supply in terms of Section 7(1)(b) of the CGST Act, because consideration is paid, and in this case, it's paid by a foreign exporter to the shipping line. It was argued that there was no consideration paid by India or an Indian party for such freight, and therefore there is no supply as being one of the arguments which was taken. But that was sort of negated by this conclusion. Court has also gone on to say that this transaction has nexus with the territory of India and the destination of goods is in India, and so the services provided are for the benefit of an Indian importer. And I think that is one of the sort of key observations that has been made in this judgment. The place of supply of services being deemed to be in India as per Section 13(9) of the IGST Act, the services would consequently necessarily be made to the Indian importer, who would become a recipient in this case. Now, here's a sort of observation which in this situation sort of brought up a tax, but it could have a different sort of impact. It could have a different sort of conclusion, outcome in different situations. Perhaps, for example, when one looks at intermediary where there is other things being done, and how you would now see the concept of recipient who is not necessarily making payment, and it's the sort of ultimate beneficiary that you have to look at, and that test may have quite a ramification in different situations. So though the payment is made to the shipping line by the foreign exporter in a CIF contract, the price is consequently factored into the price of goods, which is charged to the Indian importer party. And therefore, the court goes on to say that the importer is the ultimate beneficiary of the shipping service, and therefore they see it as a recipient. And so, there is nothing which is unusual about this when they were required to pay tax under RCM. Of course, for different reasons, i.e. composite supply, there is no liability that can arise. So as you will see, the Supreme Court has, had its go at all the points which the High Court had sort of ruled on, and pretty much all the conclusions have been disturbed, save and except this one on composite and how the transaction is to be seen. And therefore, this one of those arguments is what saved the day for the importers and for the liability that they would otherwise have had on the GST front. Now, the sort of points I would just like to take is on here on this slide is what would happen before we go to the way forwards. What would happen to those persons where there were advance rulings obtained by that particular taxpayer, and there were a series of those advance rulings even despite and after the Gujarat High Court decision. So what would happen to those sort of taxpayers? As regards refund and refund of the GST that has been paid in maybe without an advance ruling also, the issues, of course, which will come up is unjust enrichment, documents, limitation, Mafadar Industries case, as I mentioned earlier, and all of these will have to be gone into while a claim is being made. It is somewhat in the corridors that there may be a clarification which the board may issue to deal with all the refund claims that are going to be probably flooding the department in getting back the money that was paid on the ocean freight component. What also is interesting, and one can't quite predict which way it goes, but there is a service tax issue of the same question which is there before the Supreme Court, and that's pending. And if any of this is to go by, then it's only the composite argument which will sort of survive and maybe enable a conclusion. And if that's the case, there is no way in which a service tax and a GST law, a customs law would then be looked at in a composite fashion to give you the same conclusion. And perhaps service tax then does become payable. But we'll have to wait and watch as to where that sort of comes to. So what would be the sort of way forwards? Advanced rulings, yes, if they are there, then you sort of negate it. But Article 141, this is the law of the land. Supreme Court has said so. So there cannot be a sort of a dilution of that view of that decision, and so it has to apply even if there is an adverse advanced ruling in place. Time limit has to be gone into. Unjust enrichment will have to be seen. If you've claimed ITC of that amount of tax that is paid under RCM, then whether you should or cannot take the refund of that. And what are the documents that are there in question in sort of supporting your claim or supporting your refund application? All of these are going to be things that have to be gone into. I mentioned about the service tax judgment which is awaited. That's in the case of Asahi Sangwon Colors, which is pending in the Supreme Court. An issue which will maybe tickle most people's mind, and is whether for an FOB transaction the concept or the logic that the Supreme Court laid down can be applied, and it be argued that even in an FOB transaction where you don't actually, or where you are a composite supply effectively, there should be a reverse charge applicability on that. I think the view on this one is really not something that could be stated in black and white. Conceptually, as we get assessed at the customs point for customs duty and IGST, you are converted from an FOB into a CIF shipment. Therefore, it has the elements of cost, insurance, and freight. So if you have at one stage and one level, by treating it as an import of goods, been taxed, and you are paying the custom duty and GST on IGST on that, then whether it can again be sliced out and made liable as a service component and payment on the freight charges, and a GST applied on the reverse charge. Now, if you apply the Supreme Court's view as how it has concluded on reverse on composite supply and the principle of it being sacrosanct, the answer probably is that then even in FOB you should not have to reverse charge the GST again. But I think this would be a slightly tricky question to address in a forum like this. We'd have to probably go into the detailing on the documents and also see whether there is any further clues that the Supreme Court's judgment has to offer to us, because a position simply to say that it's only on the basis of a composite contract that the tax is not paid may be a bit aggressive at a high level sort of point. This is the issues that have come out of the judgment, or the views that are sort of needed to be discussed on the judgment itself on Mohit Minerals. And as I mentioned earlier, there is quite a limelight on the other aspects of the judgment, which have in fact taken up a lot of space and a lot of pages of that particular judgment. And those concern whether the GST now is going to see a different sort of shape and form. I think the issue really is blown out of proportion. The states may have the ability, as the court has said, that they have a tax at their own level in the way that they would prefer. But in realistic speaking, that may not be the way in which things go about, because they will continue to be part of India. They are in that way a part of the GST Council. Merely because it is possible that they could have a different way of taxing things or a different rate, would then they be able to protect the interests of their sort of tax base, which is a state would be a producing nation, a producing jurisdiction, or a consuming jurisdiction. So if there is a change in variation on rates on levies, then at one level it may have a benefit, but at several other levels it will have a downside. So whether a state considers that benefit so significant to say that okay, we would still vary the rate or still give an exemption or look at an abatement or whatnot, and that may really not be something that one would see as an outcome. Ultimately the position is that you have to have a harmony in the sort of manner in which you see the cooperative federalism that we've talked about, and there's a lot written about cooperative federalism, and it's a marbled cake and a three-tier cake and whatnot, as the judgment has gone on to say. And really there doesn't seem to be a outcome that would probably arise, that the states would go rogue and have a different levy at their hands. It will still, therefore, in our thinking, remain a one nation, one tax, and be administered that way. It's a destination-based consumption tax, so really it should not change too many things. However, having said that, probably there are things which will play on the minds of states, and as they go about thinking about the findings of the Supreme Court's order, which is that the GST Council is a body whose recommendations are recommendations; they are not binding. The fact is that the compensation amount is going to come to an end now, and therefore finances are going to see a different situation, the state finances. Separately, we have seen in the past that there have been certain sort of disconnects in the way the governments have operated. So Maharashtra, for instance, had a circular which said that unless we speak differently, the circulars that the Central Board of Indirect Tax and Customs would issue would apply. And then this, in January 2021, over a year ago, they said that whatever circulars comes from the board would not apply unless we, as a state formation, state jurisdiction, bring about a circular equally to say that it applies. So we've seen the seeds of this in some way. We've also seen a situation where there was a language which was put out by the GST Council after its minutes concerning annuity payments in infrastructure contracts, and that clarification took a very different form in the notification. But at the end of the day, it was very clear that the provision in the notification is what will apply, because that's what the legislature has put down, and not what recommendation sort of came from the GST Council. So these were things which were known, these were things which were being operated, they were not controversial at that point of time. So as I mentioned earlier, they were probably unnecessarily blown out of proportion at this point in time. So these are our sort of thoughts and views that we wanted to share on the judgments that have come about in the last few weeks. There are certain questions which we've sort of come to us. We've overshot time quite significantly, so we're just going to take them. Take the one which is concerning the secondment, and that is about outbound transactions, whether the service tax or GST will become a cost to the recipient. The response to that would be no, because you would be able to claim it as an export of service situation, and therefore the tax would not really apply, and that benefit then therefore would arise in there being no tax, and so there being no cost. So these are what we had to share today. We thank you for joining us, being patient, and staying with us till the very end of our webinar today. And we look forward to hosting you soon again on the next one that we have on our tax laws. Thank you.